Thank you so much, Justin, and everyone else at the Dcentral team for putting this together. My name is Aaron Malone, the co-host of the Crypto 101 podcast, better known in the space by my handle Pizza Mind. And I want to just turn this over to our panelists real quick. Give each of you guys just a quick introduction of who you are, what your company is building in this space. Alexandre, if you would go first, please.
Thank you, Aaron. Hello, I'm Alex. I'm the head of business development for VALK. At VALK, we created Merlin, an institutional-grade DeFi reporting tool that retrieves position of your digital asset deployed across multiple DeFi protocols. And you can calculate all the good stuff to make smarter investment decisions. So net asset values, historical P&L, yield generated, impermanent losses, everything in the currency of your choice. And then our users can access the free web app or our API. And our users are basically investors, DeFi investors, accounting firms, fund administrators, custodians. They use us to understand the DeFi portfolios at scale.
That's tremendous. Lord knows we need something like that in this space. Daniel, please introduce yourself and what are you guys building over at Flux?
We're always building a little bit of everything is what I like to say. I am Daniel Keller. I am the co-founder and chief strategy officer at Flux and Zelcore. Flux is a decentralized, the very first truly decentralized compute network. We have 12,000 plus nodes running all over the world. We run everything from dApps to oracles to front ends to back ends, you name it. If you want AWS for the blockchain, that's Flux. So I know talking about infrastructure isn't always the sexiest thing. You hear a lot of people today talk about the awesome, sexy parts of DeFi. We are the pickaxes and shovels and the pans of the DeFi revolution. We're the ones that are going to be paving the way. Whether it's Web 3 or Web 5 or Web 50, it's going to run on Flux.
Love it. I love that passion. And John, please tell us who you are and what you're building over at UMA.
Hey, I'm John. I'm a smart contract engineer at UMA, and we're building an optimistic oracle that you can use to get any kind of data to your smart contracts. So it stretches the idea of an oracle from not just being price feeds or something that you pull from an API, but any kind of verifiable real world thing. So you've got off-chain computation, you've got cross-chain bridging, which we built with the Cross, all kinds of cool stuff that you can build with it. And I'm just working on pushing the boundaries of what's possible using an optimistic oracle.
And that's a great segue into the first question I have that I want to direct to you, John. What is the current state of DeFi from a technical standpoint? The previous panels were talking about user experience and other things to get mass adoption and lots of people using it, but are we even really ready from a technical standpoint?
So I guess there's two parts of it. From a technical standpoint, DeFi is working great. I mean, you had a big crash and centralized entities had to pay back the DeFi protocols and follow the rules of the DeFi protocols because the bots and the smart contracts are ruthless and they will enforce them and they'll liquidate your position if you don't pay it back. In terms of mass adoption, it really comes down to key management. I don't even think that's a DeFi thing so much as just sort of like a crypto culture thing and a wallet thing. What is a regular person going to do to secure their keys, to sign transactions with their keys? That's kind of like the fundamental problem. And this predates cryptocurrencies, I think. Like you have a lot of the same problems with public-private key management for email. So it's not new. I think for DeFi to get mass adoption where people don't just plug their money into a centralized system that then hopefully invests wisely on their behalf in DeFi, you need to have better key management tools. So it really comes down to the wallets, I think. And I think there's a lot of interesting space that you can explore there around physical paper wallets, around smart contract-based wallets where you maybe signal what kind of transaction you want to do, and then somebody else is composing that transaction on your behalf, and it only goes through if it actually does what you intended for it to do. Because it's sort of like not everybody can write a smart contract, and not everybody should know how to do that. Most people also don't know how to interpret what the transactions are doing. You submit it, and if the wallet doesn't tell you you're doing something stupid, it's going to go through and, your apes are gone. But if you're signaling like, I want to trade the ape for like this much ETH, and somebody else is building that transaction for you in some decentralized way and pushing it, and there's an enforcement mechanism there, I think that starts getting you closer to something that a regular person can use safely.
Yeah, very well said. I mean, it's just really like this past year that something as massive as Coinbase is even checking Ethereum addresses to make sure you haven't mistyped in something or pasted something with like someone's name at the front, and it just sends it to a completely bogus address. So yeah, I think that's a very, very good point that you bring up.
Yeah.
And Daniel, what are
go ahead. Sorry. Oh, I was just going to say, it's like the inverse of the other side. Like the protocol will ruthlessly liquidate your position. The protocol will also send your funds to the burn address if you screwed up. And
yeah, absolutely. Having more safeguards in place to help us, not trip over the things that we don't know that we're tripping over. Definitely, much needed in this space. So great point. And Daniel, what are some of the trends that you're seeing being built as developers come to you saying, hey, I was reading about Flux. I want to build this. Can I build this on Flux? What trends are you seeing coming out now from people that are starting to develop today?
Well, I hate to be the guy that pokes a big hole in something, because I think there's a lot of awesome things that are happening in DeFi. But if you're building a DeFi project and AWS goes down, you're not truly DeFi. So I mean, getting back to the basics of infrastructure, much like John was talking about with the user interfaces, with the wallets and the platforms. What Flux really brings to the forefront is the ability for people to deploy in a truly decentralized manner. And as a matter of fact, one of the speakers before was from Cadex was talking about their decentralized exchange. Well, you're not a decentralized exchange if you're running on AWS. You're not a decentralized exchange if you're being removed from that. You need to be blockchain by birth. And that's exactly what Flux has set out to do, is start to lay the fundamental groundwork for infrastructure. And as I kind of stated at the intro, infrastructure isn't always sexy, but it's what it's going to take us to the next level. The ability to have a user interface that's seamless, that feels a lot like the current financial system. And we would be mistaken to say over the past several months that we haven't seen the glaring issues with DeFi. What we saw was basically refugees from Wall Street that came in and played the market inside and out, and we suffered for it in the end. We have to build back better. I mean, that's just the way it is. We have to build the technology on a foundation that is decentralized. Then DeFi can truly reach its maximum potential, and I think we're headed there.
Yeah, very good points. And while infrastructure may not be sexy today, I think it's going to become the sexiest thing in crypto over the next few years, because home mining for an average person is gone. Those days are over with. It's too competitive. But you can use your hardware resources on decentralized cloud compute platforms like Flux and contribute and earn a yield that way. And I think once more people realize that and begin planning their systems around participating in these kinds of projects, it's going to really bring a renaissance for what people can do to earn a yield while they're asleep, and have their money work as hard for them as they're working for it, and have their machines work as hard for them as well.
Yes, sir.
And to Alex, how do we bring more people back to DeFi? As Daniel mentioned, Wall Street came, they saw, they conquered, they took. We had an amazing DeFi summer a couple of years ago. We were kind of looking for that to come back again, but then NFTs stole the spotlight. How do we make DeFi just as sexy as infrastructure is going to be in the future, and bring more people back?
Yeah, I love what you said, Daniel. Like, the infrastructure is not sexy, but this is where we make the user experience better. This is where we make it seamless and understandable. Actually, we are very proud of our infrastructure and the hard work we do with the graph and the background and building our private sub-graph, because the public ones are not adapted to the problems we try to solve. But I can talk about that later. But actually, on the DeFi, right? So are we in the winter? Like, although the TVL has contracted with the arrival of the winter, it mainly followed the price contractions of the traded assets, right? So that means like the DeFi traders, those who are already adopted this investment style or this asset class, are still here, right? They're not going anywhere. They know how good that is, without mentioning the few hiccups, right? But DeFi is still alive and kicking. So, I mean, as someone who thinks a lot about growth and business development, at least there's no problem of retention there, right? So now the question is, or do we get the next cohorts to join? So I think like it will really come as as John said, right? Really come from the the fact that DeFi should be easy to understand and accessible to the new users, being like individual or institutional users actually. So first, like, how do you understand really how your money perform, right? So, okay, you can chase yield, but if you have impermanent loss and currency losses left and right, you need to understand and report on the correct analytics in the currency that matters to you. And this is not a trivial problem to do, right? We can talk about that as well later, but and then it comes from a better UX and UI as well. So that's probably the mass adoption will probably come from a mobile experience for DeFi. So kind of ease of access. You don't need to go to your PC or your computer and with like a clunky interface, right? It should be like easy to understand. So that's probably going to bring in the retail segment. And then it comes also from a greater inclusion with auditable, risk-adjusted returns that can be supported by easy to execute, data-driven trading strategies. So this will probably open the doors to institutions that are currently stuck in CeFi. So really making it like more transparent across the investment process. Yeah.
That makes a lot of sense. So we've all done a great job so far at analyzing what the problems are with current DeFi. But my question to you, John, is who's fixing this stuff now? Who's going to take all these things and say, we're going to build something better, and this is how it's going to be done? Is it just from project to project, we're going to see brand new things arise? Or are there, DeFi developer consortiums where everyone's trying to build together and recognize all these issues and come up with some kind of industry standards?
Yeah, I mean, I really do think that key management is the big problem, especially at the individual level, but there's also the broader level of how do you coordinate a DAO, for instance. If you have a big DAO treasury, how do you make the management of that treasury actually decentralized? Because right now there's a huge reliance on multi-sigs. So I really like what Gnosis is doing, where they're not just focusing on, just being a multi-sig, but they've created the SAFE protocol now, where it's sort of like an operating system for managing shared resources. There's a lot of experimentation around Zodiac. UMA has a module that plugs into Gnosis safes that lets you manage a treasury optimistically. So if you vote on Snapshot, that Snapshot vote can be enforced instead of just hoping the multi-sig actually does it. So I think that really opens it up a lot. I think also we need real world assets in the long run. Right now, it's a circular kind of snake eating its own tail economy where you have purely digital assets. And there's a lot that we could improve there just around these like shared safe management systems where it's not just a multi-sig, where it's like groups coordinating. But in the long run, you want to have the real world economy running on crypto rails and fully unlock the potential of DeFi. If you could like refinance your house, it's just everybody's been trying to do home mortgages since the beginning of smart contracts. And for that, I think that you do need really good general purpose oracles like UMA, but you need like some way to bridge that real world set of events to a smart contract and make sure that they're linked. There is like some stuff around that right now, but a lot of it is kind of like, a trust me kind of centralized thing where you hope that whoever the custodian is actually follows whatever rules you laid out, and there isn't on-chain enforcement for it. So I'm really curious to see how people build out those on-chain enforcement mechanisms to pull in, the rest of the economy.
Yeah, well said. There's still such a lag behind in the regulatory layer where you can do a transaction for a house on chain, but will that title deed be legally recognized by the county recorder? They might not even know what you're talking about.
Yeah, and there's like a lot of things too. I mean, there's no way that, personally, I don't think that you're going to see those deeds get recorded on the blockchain either. Like, I don't think it's going to become a purely digital thing. You need some kind of custody layer that has some kind of like on-chain slashing or something. Like, you need to bridge the gap. Blockchains need an API to the real world that's just generalized, where you can bring in any asset, any kind of value at all, and then start tokenizing it and making smart contracts to work with it.
Yeah, well said. Daniel, what are your thoughts on what we've just been talking about? And what are some of the biggest problems in the real world that you think DeFi can solve?
Well, kind of what John was saying, I agree with him. I think that a lot of these pieces are it's a disruptive technology. It's iterative. We're continuing to walk through the complexities of really something that's never been done before. And I think as we continue to build these pieces out, we start to move over to other sectors that will learn from us as well. So, I mean, we're dealing in decentralized finance, but you could easily see this technology used in other places, maybe electronic medical records, maybe supply chain management, maybe asset management. So I think that we're doing kind of yeoman's work now because we're the ones down in the trenches with the shovels. And I don't think, I mean, I everybody talks about being in a bear market, or I don't see that. I see a bear market for the asset classes, but I do not see a bear market for the infrastructure that's being built. You see it being built at a rapid clip. The iteration is huge. If DeFi was dead, Sam Bankman-Fried wouldn't be buying everything that's left under the sun. I mean, and I think the reason is because the technology it's bigger than just this particular fintech or the finance sector. I think you could see this start to permeate different areas of technology overall. And in the end, that's what we want to do. Is we want to take that standard technology stack and we want to get it back to basics, and we want it to be centralized, and we're the ones that are going to be pushing it there.
Well said. And back when DeFi was coming out, it was pretty much just on Ethereum at that point. A couple other chains had their own isolated stuff, but not anymore. For the next DeFi wave, everything's cross-chain now. And it's almost like going to DeFi in 3D. So if you're brand new, not only do you have the key management issues, but now you're trading things cross-chain, and you've got all these different crazy ways of earning a yield, and all these new financial primitives that are coming out. How do you guys over at VALK really keep track of all this stuff and, decide what new features and new chains to add?
Yeah, well, welcome to the multiverse, right? It's crazy that you can. I mean, first, your DeFi strategies are across multiple protocols by definitions, right? You will run like a multi-position across different protocols with the same asset. It won't be able to assess individual yields from lending a DAI on Aave, or daily P&L from running an LP strategy on Uniswap compared to the initial investment, right? So like the platform like Aave, for example, only show the net worth of the user's portfolio, or breakdown per currency, and the value that is displayed is equivalent to their A token. As for compound, if it's like another part of your strategy, when supplying the currency, you receive a C token, and the price of the C token increases with each new block. So additionally, if you have an investment is made with non-stable coins, like now we have like two variables coming into play: the yield received in a token, for example, like in ETH, that is invested, and the token's price compared to the USD, right? So really, like here, important metrics such as P&L per strategy, or aggregated debts and fees, or yield in actual USD, and other metrics are very hard to assess, actually. So really, the trick is to track your actual P&L in a currency that matters to you across all the transactions in your individual strategies throughout multiple protocols. So that's the problem we tried to solve. What's interesting is we started using the public subgraphs, for example, for all these protocols, and very quickly we realized that they were not like fit for purpose. So we had to re-index all the protocols and kind of go in and dig for the gold in what's publicly available, right? So that's why I resonate a lot with what Daniel says, is like the infrastructure and all the work that is done behind the scenes is not sexy, but hey, it brings like a lot of good results, and it makes the UX much better, and it makes DeFi more understandable, so more accessible, really.
Yeah, and it's so necessary. I run my own venture capital firm, and we've got 50 to 100 different positions and small coins all the time. And it is literally impossible to figure out what's coming or going, or what things are valued at, or where they are. So definitely going to have to give VALK a chance to solve all of my problems.
And it's only going to get more interesting, Aaron.
Yeah, absolutely. It's just the beginning. And this question is to everyone. I'd like you to take the same turn in order. What features are you looking for on a new DeFi application that you're going to stumble upon, 6 days, 6 months, whatever from now, but it's going to have something about it that has this aha moment for you. And you're going to say, oh my God, this is going to be the next Uniswap, or this is going to be the next Compound. What are those special features that you're looking for to give a new platform just an incredible life-changing value? Because I think we can all agree that in Web3 and DeFi, we haven't had the Amazon or the Google come out yet. We don't know what's going to be that juggernaut that dominates the industry for 2 decades yet, if it even exists. What are those features that you're going to be looking for?
We exist, Aaron. No. I'll take that lead on that if you don't mind. I think the big thing right now is we need to look at projects that are truly. I think we're all kind of a bit jaded over the past few months about some of the way the projects are ran and managed, especially in DeFi. And I think we really have to get this back in the hands of the people. So I know I sound like a broken record when I'm saying this, but this is unbelievably important. If you're out there and you're building a project and you're developing it, make sure it's truly decentralized, because that aha moment came for me the very first time I discovered Bitcoin. Right? We've all been down that rabbit hole. You see it first and you're like, hey, this might work, and then you think about it a little longer, and then poof, it's your eyes widen and you're tuned in. I see that with a lot of different projects today, but we have to really make sure that we get back to basics. Decentralization at our heart across the board.
Speaking of getting back to basics, the first line of the Bitcoin white paper is talking about being digital cash, and we still don't have good digital cash. If you just want to buy something, I think the first time I tried to buy something in person with Bitcoin, it was 2012, and there was a Chinese restaurant near the Internet Archive that started taking Bitcoin because people were getting paid in Bitcoin there. And I just kind of went and I submitted my transaction, and it's waiting, it's 10 minutes, 20 minutes later, and they're like, we trust you, we hope it'll arrive sooner or later. And that was the Bitcoin transaction. But fast forward to this year, going to ETH Denver, and to go to the food trucks there, nothing against ETH Denver, but they set up a crypto-based payment system where you go and you get your token on a test net for Arbitrum testnet that'll be food vouchers, and then you're going and you're scanning that, and they're accepting this fake payment. And it's if you're ETH Denver and you can't figure out payment with your food truck where you can make the food trucks accept crypto payments, what are we doing here? And a lot of that has to do with the key management. It needs to be a lot easier to get to that point where you can buy a sandwich. So if somebody can come out with a thing that's really easy for me to buy a sandwich, not going through a centralized intermediary, but just crypto native the whole way, okay, that's got my attention. How you get there, I am not super concerned about. There's all kinds of different techniques you could do, around rolling up lots of transactions, however you're relaying it. As long as it's settling on a truly decentralized network where I control my own funds and I'm sending it to, the recipient, and they control their own funds, there we go. It might be 15 years later from the original idea, but we'll finally have digital cash and start building up from there.
Yeah, it's a great point. Go ahead.
Sorry, Aaron. Yeah. So actually, John, that's super interesting, right? I spent a lot of time in Kenya, and there they have M-Pesa. So it's all mobile payment. So you just have a code. So it's centralized, right? But there's this type of user experience that I think I'm looking for, and I'm thinking that about the refi or the regenerative finance projects on the mobile first Celo network, right? As an example. But I would say when DeFi that is best is when the protocols reward behaviors that are being beneficial to the whole society, right? So I'm very excited about DeFi projects who try and eliminate the tragedy of the commons and solve for financial stability first, financial inclusion, and hopefully protection to the environment and biodiversity. And this is interesting because that could be matching some ESG framework, and that could open the institutional floodgate as well.
Yeah, well said. I'm really looking for things that have incentive alignment across everyone in the ecosystem, from venture capitalists to developers to token holders to liquidity providers. If there's different incentives for each pool, which it seems like every project that's ever came out in crypto treats people differently, then you have people fighting over different pieces of the pie through governance proposals. But if you treat everyone equally and the tokens are distributed and the whole value of the platform is being distributed to the token holders, then all of a sudden everyone's working together on the same page. And what's really, really important is that you're not paying out just more of some token you printed out of thin air, but you're delivering tokens like stable coins, like the layer 1 tokens that are very liquid, or even Bitcoin or wrapped Bitcoin. And all of a sudden you're holding a token that has a cash flow to it. And it doesn't matter if you're in a bull market or a bear market. And really the price of that token doesn't even matter. It matters what kind of cash flows are coming through it. And I think that's going to be a real revolution for DeFi. And I'm starting to see more and more of these projects coming out. There's over 24 so far that have come across my desk, but they're still tiny. And that kind of sector is still very much in its infancy. A lot of that's due to, US regulation uncertainty and things like that. But I think there's ways to construct it in a legal way through, I'm not going to give legal advice here because I'm not a lawyer, but that's one of the hurdles that I think will get solved in the future. And to me, when I see something like that, where just simply holding this token in my own custody and I don't have to stake it and risk a staking contract getting hacked, I can simply keep it in my own hardware wallet and it just earns me a yield in good quality coins. Like, to me, like that's the aha of something that's going to be a huge winner in the future. Yep. And just to touch on what John was talking about too, as far as the digital cash payment rails, there's something called AMP Network out there that has disintermediated like 17 parties in the traditional world, but there's still the last mile step to go that other apps and decentralized apps have to connect to, and different payment processors and terminals and things like that. So that last piece hasn't really been totally solved yet, but I think when someone does in a decentralized way, it's going to be really, really big.
Yep. Can I throw out a really quick pitch, not for something that we're building, but something I want somebody to build?
Yes, please.
I think that people actually understand physical cash really well and how to handle it and keep it secure. And I think that paper wallets could be a left field way to kind of deal with that and maintain full decentralization, where you have like the public key is like visible and the private key, you flip it open, you see it inside. And then if you want to transfer some assets, you just give somebody the card and they can make sure that the things are there. And now they have.
Yeah, I've actually seen it at a couple conferences. People are making like digital paper, just like money. And there's a tiny little chip on the paper with a QR code, and it will actually act as like a hardware wallet, but it's a piece of paper. So that could be another thing in the future that catches on. And I think that that tangibility is another thing that is going to help bring more mass adoption. Having anything you can hold and touch and see in your hand, as opposed to something on the computer, is still so much more valuable in the eyes of the average person. Well, guys, we're just about out of time, but before we go, let's drop Twitter handles, contact information. Where can people go to ask you more questions or learn more about your products?
Yeah, I can start because mine is here. So for VALK, check out VALK Tech on Twitter, or you can see the URL of the app, and you can find me at Genius But Modest on Twitter.
For our projects, you can go to uma.xyz or across.to, across two. Across is also doing like some crazy yield right now. If you want to be an LP, I think it's like 20% APY plus like an extra token denominated APY. So, go and get in on that. And then you can find me on Twitter at JDSHUTT. And I post about a bunch of stuff.
Yeah, and you can find out about Flux at runonflux.io. You can follow us on Twitter at runonflux. You can also check out Zelcore, which is our basically our browser for Web3. John, it goes a long way to address some of the issues you said about key management, so I would check it out as well. And you can, if you want to hear the rantings of a crazy old man, it's at DAK_Flux, and that's me.
Love it, guys. Thanks so much. And you can always learn more about crypto at the Crypto 101 podcast, available anywhere you listen to podcasts, or follow us on Twitter at Crypto 101 pod. Justin, we're turning it back over to you. Thank you so much, Dcentral, for giving us this forum to share our ideas. And we'll be back with the next one.
Thank you, everyone.
Thank you.